Welcome back to The Explainer. Today, we're diving headfirst into one of the biggest, most heated debates in all of finance: Bitcoin versus gold. Which one is the ultimate store of wealth? Let's break it down. All right, let's start with a really high-stakes scenario. The legendary investor Ray Dalio was asked this question, and his answer was pretty intense. I mean, we're talking about the founder of the world's largest hedge fund. When he talks, people listen. And on this, he did not mince words. But here's the thing. Is that still the right call in today's world? I mean, everything is going digital. Governments are printing money like there's no tomorrow. So you have to ask yourself, how do you protect what you've earned? This is the core question we're looking at, and we've got two major contenders. So first, let's get into the digital challenger, the one that's completely shaken up the financial world: Bitcoin. And for the people who believe in it, it's not just some alternative to gold. No, they see it as a straight-up upgrade. The whole argument for Bitcoin really boils down to this one single number: 21 million. That's it. There will only ever be 21 million Bitcoin. Ever. Think about that for a second. Its supply is absolutely fixed, hard-coded, and enforced by math. This is the bedrock of its claim as digital gold. And this is where it gets really interesting when you compare it to gold. See, gold is definitely scarce, right? But it's not absolutely scarce. Every single year, we mine more of it, adding about 1 to 2% to the total supply. It's a slow leak, but it's still a leak. Bitcoin, on the other hand, has the tap turned off permanently at 21 million. It's a whole new ballgame when it comes to scarcity. Then you've got the whole digital advantage. You can zap millions of dollars worth of Bitcoin across the planet in minutes. No banks, no permission needed. It's incredibly divisible, so you can send a tiny fraction of a coin. And get this, you can store it on a little flash drive or just in your head by memorizing a phrase. Try doing that with a gold bar. The pro-Bitcoin camp says these are superpowers that gold just doesn't have in our modern world. Okay, but hold on. Let's not get ahead of ourselves. Now it's time to talk about the reigning, undisputed champion. Let's look at why gold has been the go-to for preserving wealth for millennia. So Bitcoin's been around for about 15 years. Gold? We're talking 5,000 years. 5,000. It has outlasted empires, survived wars, seen currencies come and go. I mean, you name it. This isn't just a good track record, it is the track record in human history. Nothing else even comes close. And look who trusts gold. It's not just people like you and me. We're talking about central banks, the most powerful financial players on the planet. They hold over a fifth of all the gold ever mined. And get this, they're buying it up at record speeds, basically as an insurance policy against their own currencies. Bitcoin, it's just not in the same league when it comes to that level of trust. And this gets back to Ray Dalio's point. He lays out exactly why these big conservative institutions are staying away from Bitcoin. For one, the volatility is just insane. The price swings are wild. Then there's the fact that every transaction is publicly traceable. Plus, you've got the constant threat of government crackdowns and even far-out risks like quantum computing. For a central bank, these aren't just minor issues. They're absolute deal breakers. And yeah, the numbers on volatility, they really tell the story. Just look at this snapshot from the COVID crisis. In a 5-minute window, Bitcoin could jump or crash by over 12 or 13%. That is a roller coaster. Now look at gold. It barely budged. It was like a calm lake in the middle of a hurricane, and that stability is exactly what you want in a safe haven asset. So, okay, we have this new school digital powerhouse on one side and this old school timeless champion on the other. How does a pro like Ray Dalio navigate this? Well, the secret is, it's not about picking one over the other. Turns out, Dalio actually owns a little bit of Bitcoin, but he's very clear. It's a very small amount. He doesn't see it as the new gold at all. For him, it's purely about diversification. It's like buying a lottery ticket with incredible odds. You don't bet your life savings on it, but it's an interesting little piece to have in the mix. And this all fits into his bigger picture worldview. He looks at all the government debt piling up and knows there's really only one way out for them: devalue their currency. Basically make the money in your pocket worth less over time. So what's the defense against that? You own hard assets, real stuff that politicians can't just print more of. And here's what that strategy actually looks like. He suggests putting maybe 15% of your portfolio into these hard assets. But look at how that 15% is broken down. The vast majority of it, 14%, is gold. That's the anchor. And Bitcoin? It's that tiny little 1% slice. It's there, but it's a small, speculative play, not the main event. All right, so let's bring this all home. How can you take this thinking and actually apply it to your own strategy? It really comes down to this. First, know your goal. You're trying to protect your wealth from currency devaluation over the long haul. Second, you build your foundation with gold. It's the stable, proven core. Third, you add a little spice with Bitcoin. That's your satellite position, the one with that crazy upside potential. And fourth, and this is crucial, you manage the risk by keeping that Bitcoin position small. It's not about choosing a winner. It's about building a team where each player has a specific job. So let's just put it all side by side one last time. Gold gives you stability, backed by thousands of years of trust. It's the anchor in your portfolio. Bitcoin gives you the potential for explosive growth. It's the diversifier, the high upside bet. Two very different assets for two very different jobs. Which brings us to the final question, and it's a big one. As the world keeps changing faster and faster, what's going to be the true safe haven? The asset you can physically hold in your hand, or the one that exists as pure information that you can hold in your head? The past versus the future? That's a debate that is definitely not settled yet.